TGIF Warriors, which has a meaning of thank God I found ForexAnalytix. Who feels that way? Hi, James, Jordan. Someone on my team feels that way. Bran, Michael Weisman, Kman, how are you? AJ, George, Patrick.
Could be thank God I found F.A.C.E.
There you go. That's good. George feels that way. Anyone else? Yeah, Patrick feels that way. Oh, yeah. Oh, hell yeah, Brand says. Chris, haha, yes, good morning. Welcome. Ren, how are you? Okay. So, Ryan, we had kind of a negative week here in Euro. There's a weekly.
Bit of a surprise. Well, it can't go up forever, can it?
Well, I was looking for this to happen. And maybe what we get is, I'd like to be a buyer down here. 107 and a half. Yeah, in the sevens, maybe this peak here. I didn't do any fibs, but that's where I'd be looking for it. And Dixie, we talked about maybe making a trip up towards 105 or so.
Yeah.
And what might drive it is just a little back up in yields. Yesterday, before we got off, we talked about, I told Blake that TLT had filled this gap, came off pretty good, so it might be beginning. I think that the TLT could come back halfway. So, that'd be, maybe around here, 87-ish, 86. I don't know how, that can't hurt the dollar with that happening. So, gosh, even the superstars are really, you have to say silver's a superstar, right? And it's putting in a pretty negative reversal day so far. Gold is too. Gold tried to make a new high, just missed it. So we'll see if the S&Ps couldn't follow suit. They look like they were going to, and then recovered, but they're coming in lower. So dollar up, everything down, dollar down, everything up. So looks like that's what we have going on here.
Yeah, a lot of eyes obviously on Powell later. Is he going to push back against some of the Fed speakers? Is he going to endorse some of the Fed speakers? Is he going to say nothing at all? So we were talking about this on the Flow Show. There's two clear outcomes from him. Either he speaks about monetary policy and whatnot, and then you've got to go with whichever way he leans, dovish, hawkish, or in the middle. Or he doesn't speak about anything, and then I think the market pushes the dovish button because he hasn't said anything hawkish.
And hey, good morning, guys. Ryan, since you had this conversation already, and obviously Dale and I didn't get the opportunity to listen to the Flow Show this morning.
I was dreaming about Ryan.
Yeah.
Okay, yesterday, me today. That's become a bit of a
the dream team.
It's a reoccurring theme. Dale, you're weirding us out, buddy.
Good. That's my job.
I was going to ask you though.
That's my job.
Ryan, when you're, you think about this and you think about what the Fed, the Waller speak, if you will, and all the, Bostic and Bowman, and you got all these Fed governors that are, pretty dovish. The fact of the matter is stocks are at highs of the year, basically. Yeah. And, you're just loosening financial conditions still. I wonder how the Fed's.
You think that Powell looks at 2050 gold, and does it mean anything to him with his agenda?
I don't know if gold or the dollar really factors too much into his equations. What do you think, Ryan?
Well, that's the thing. You have to look at what the market is doing going into it. Is the market overly dovish or overly hawkish right now? It's leaning on the dovish side. But, yields aren't collapsing to silly levels. The market isn't getting to extreme dovishness where he perhaps has to come out and counter that. So the market's going where it should be going anyway. We know rate cuts are coming at some point. We know rate hikes are probably done unless we see a real turnaround in inflation. So he sits there and looks at markets and go, right, is the market getting out its pram, or is it, roundabouts where it should be? And I think it's roundabout where it should be. So there's no real reason for him to come out with any strong message. Just as I say, if he wants to counter some of the other Fed members, or if he wants to keep the message in play for the FOMC that job's not done, then he'll do so. But yeah, as far as the market's concerned, we know it's leaning a bit dovish, but it's not anything extreme he needs to worry about particularly.
Kind of an ugly week in a lot of the Mag 7s. Nick put out a chart on Twitter. It was great. Netflix was holding up the best. It looks like it's starting to roll over. And Facebook, Meta, has taken it on the chin too. Tesla, so what? You got a cool truck. Still looks lousy. To me, it looks like the market, these were leaders, right? That's why they call them magnificent, and they don't look so magnificent this week. Apple holding up the best.
Joe in our chat room, or Ripsters as he's known, is he wrote taking out the generals, it's something that, I forget what, I think it was from a comment from Mark Dow, to shooting the generals and buying back the soldiers or something like that is. But yeah. Basically, it was just talking about rotation. Rotation.
Yeah, because the financials look fine. Yeah, and everyone's worried, including myself, about banking problems. But you have the banks all acting pretty good, and to me, that's pretty important. Bitcoin's I think, made a new high here, barely, but look, it's still diverging here. It looks like a short. Did we get that news you were looking for, Blake?
No, everybody thinks it's going to be, the ETF. Oh. Here's the thing about an ETF being launched, which, I guess it's inevitable. I don't follow the crypto news like there's a lot of you that are listening that do. It's kind of like when the ETF, the Bitcoin, it always, in crypto, it seems like it's here to stay. Because it's integrated into, futures, and you've got, you got options on Bitcoin and Ethereum. And it's just, as we've said here over the years, it's being woven into the fabric of the financial markets. And then when you offer out an ETF, it makes it very easy for anybody to buy crypto, or to be involved in the crypto space via an ETF. So it's kind of like it basically, validates, from the SEC's point of view, validates crypto. And so everybody's just waiting and buying into this, because it's like, it should be, once it's done, it's like, okay, it's not going anywhere. And that's the whole dynamic behind it. But I still think it's going to be a buy the rumor, sell the news, but then you got to buy the dip. But it just keeps grinding higher, Dale. I don't know.
Yeah. Aussie showing relative strength compared to Euro. I still think it's going to come down to this moving average here around 4.5. So I'm preparing myself to get long mentally on this dollar rally and pullback in FX.
I'm sitting in short short Aussie, short Euro. I'm long dollars, pretty much across the board. And I'd like to see how far it can go, because you take stocks, for example, the Dow is at the highs of the year right now. Yeah, Dow Jones.
I saw that.
Yeah, so we're at highs of the year. The S&P is not far off of 4,600. We went as high as what, 45.90. 75. Well, let's see, 45.90 basically. Yeah. So, which we've been talking about the last couple of weeks, Dale. And you got the Dow at all-time highs, and the dollar, pulled back to the 618. So what happens when or if you start to see stocks sell off, and this is kind of like the setup that I have been talking about with the ForexAnalytix community the last couple of days, and I think I addressed it here, and I can't, it's when we do so many shows.
The big range.
Well, yeah, or more importantly, you take every macro analyst and like I was just watching one yesterday of a panelist of analysts. And I'm not going to talk bad about who it is, because I listen to all of these. I spend at least an hour, if not 2 hours a day, listening to these economists that that funds pay for. I traded for a private fund for 5 years, and they pay for analysis not Prometheus research group. I'm trying to think of one of the ones where the guy's really big on CNBC, and I got his research for like 5 years. But these are what groups do. These are what funds do. They pay for Danielle DiMartino Booth's analysis. They pay for Jim Bianco's analysis. They pay for and all these big names that you see on CNBC and Fox Business, and every one of them, just the run the gamut. 90% of them we're going into a recession this year, and it's probably scared a lot of people. So you got the stock market that's up 20% for the year, or 18-19%. You got people that have been sitting on the sidelines going, shit, I guess a recession's not coming. I'm only up 7% for the year, or 5% for the year. Then you got FOMO, over when CPI came in weaker. You got everybody chasing the market. Wouldn't it be classic that the market ramps up another 5%? Everybody gets involved. Everybody gets, balls to the wall long. And then the market rolls over from resistance, and then we lose a few percent going into December. And then everybody that was up 7% is down another, 3% in December, and they still don't meet, the expectations or beat any of the indices out there. And that would be classic market stuff, classic positioning, getting people stuck on the wrong side. You got so many new fund managers that are in their 30s, they're in their 40s, that haven't seen shit, Dale. Ryan,
punks.
Kman.
They're just a bunch of punks.
Bunch of punks. So yeah, and then Mike says, "Hey Blake, what about the Christmas rally?" I have been around and seen Christmas rallies last from Christmas to New Year's, and that everybody goes, "There's your Christmas rally," and it sells off all of December. I've seen that market. You've seen that market. Those of us that have been around for a few decades or a couple decades have, or more. So don't get too comfortable thinking that, oh, this is it, and we're going to rally the whole month of December, because that is not always the case. And the market likes, there's one thing that's true, and Ryan, I know you would confirm this. The market likes to screw as many people as possible. So if you think about the dynamics of this year and what has happened throughout the course of the year, and how the stock market is up 18% year to date, and how many people are underperforming, how much FOMO has just happened over the course of the last several weeks. You got a dovish Fed. It's perfect. Dovish Fed, the disinflationary data, U.S.
All
data.
Right, I just doubled down on my shorts.
Exactly. Let's get.
You convinced me at short, wrong over the high of the week.
Anyway, I don't have to map it out for you guys any further, but I think you get my drift. Ryan, what are your thoughts on that?
Yeah, I'm more inclined to think stocks come off, because we've funny time of year. We've just come over month end. You see what rebalancing happens then. The end of the year is another big time. Like you always pointing out, if people have made their money, made good profits over the year, you're locking them in. You get out, you close your books, you bank the money, you sort out your bonuses, and so the stock market's had a good run this year. So you've got to expect that some of the big funds are going to close off the books
mainly in a month.
It doesn't mean they can't. It doesn't mean they can't reinstate those trades. Good month. It doesn't mean they can't reinstate those trades early in the new year, and that's when you get your rally. But it's all about for a lot of funds closing off the books, banking the profits, and then worry about what happens in January.
Right. And look at this bullish hammer on this weekly dollar chart. Now, we still have today. We got to get past Powell. And my assumption is going to be that he's not going to do we're done raising rates, and now it's going to be higher for longer. That's gonna be his mantra. It hasn't
I heard
changed.
Bianco today, Blake, and a CNBC spot he did, so we're not paying for his research, okay? But he's looking for 5.6 in the 10-year, sometime by mid-year next year. And his rationale,
I mean, that would be something. Well, the dollar would definitely be higher in that situation, and I can't imagine stocks are going to be a lot higher as a result.
And he's saying because there will be no recession. So and that inflation could remain elevated above their target. Anyway, he's looking for that by mid-year. Doesn't mean that we can't bounce in yields here and then have another decline in yields before that happens. So,
well, I think it's all very fascinating as we go into December, and I think you got to keep your watch your six. That means watch what's happening behind you, and keep an open eye and keep an open mind as we head into the end of the year. I think volatility is about ready to rise, and I'm not talking about just
from your
the VIX,
lips. Yeah,
but man, I think we're on the cusp of seeing a little bit of volatility in the markets. Hey, we're going to bring in Nick, our new one of our new team members, but before we do that, Kman, I haven't heard from you yet this morning.
Oh, I didn't know you were here, Kay.
No, I'm here all the time, but
yeah, there he is.
Guys were going on a rant, and I just said, like, sitting in the background, listening, getting a headache.
Come on, a headache. Oh, geez. So what's up, Kman? What are your thoughts here going into the end of the week, real quick, before we bring in Nick?
Yeah, I think Powell is going to be one, because we are hanging around relatively important levels on the yields or the bonds, and it may be more important what he doesn't say than what he really says. I still think he's going to walk the fine line, as he usually does, cover the whole spectrum of what's hawkish and dovish. But perhaps this time the market will just want to hear one thing: is he going to fight back against what Wallace said or not? And that may be the decisive factor on how the dollar will close the week, and then we start December in all earnest next week. And so that's a bit my thought. I'm with you, Blake. I'm long dollars, different ones. I'm long dollar Swiss from last night, and I'm short euro dollar already for a while. But the euro is a different thing. I think euro, if you look at the crosses as well, they are still very much on the defensive. So
they are, yeah.
Depending on what Powell says, I may throw it in a cross rather than the dollar, and ditto for the Swiss. But we had extremes yesterday on the fixings, right? If you look especially on the Swiss franc. I thought sterling as well, but that is continuing a little bit this morning. So I'm not going to fight that one. But it's like the two main ones. I think for the time being is euro and Swiss. Keep it European. I quite like, and I think, is it JP Morgan who said that providing the markets don't collapse, of course, like equities and stuff, but they kind of like the mix backing. Sorry?
Jamie Dimon?
No, it wasn't him. It was a research piece, if I recall well. Said that they liked the mix in December. But I think for that, I don't disagree, but for that we need risk to hold up relatively well.
Yeah, I've been establishing a dollar mex short, or a Mexican peso short, a dollar mex long over the last couple of weeks, looking for this bottom to hold. But I guess it has more to do with risk, right? I mean, if we get some risk aversion, we're going to be back above the 200 DMA. If stocks continue to grind up and we get this amazing Santa Claus, rally, then yeah, I mean, we'll trade back below 17, I guess.
I think it was a lot of it was month end, in mix and rand as well. It appears to have been very much driven by month end flows as well.
Yeah. Well, Kman, thanks for your thoughts. But real quick, I want to bring in Nick. Nick, what's driving the markets today? And welcome back to the show.
What's going on, Blake?
What's happening, buddy?
Everybody
Hey,
else?
Nick.
What's going on, Dale?
How are you, bro?
I really like that discussion you guys just had about the S&P, and I think I have a few things to share that might assist in that narrative.
Yeah, let's see what charts did you bring?
All right, let me grab the screen here. All right, can you guys? It's loading. Can you guys see my screen?
Yes.
Yeah.
All right, awesome. So the bonds have been driving the market a lot lately, and we've been noticing that the bond auctions have been causing a good chunk of moves this week. But I just wanted to point out that the US 10-year, this spike high in October and this spike high in August, we pretty much bounced right where we were supposed to. I'm hoping to see the bonds get above 4.5% if we can. But basically what I'm pointing out is this is pretty large resistance, or I'm sorry, support. And I'm going to be watching that closely because we've been noticing how much bonds are driving the market. But when I take a look at the S&P on the 4-hour, and Dale, you taught me this back in the day. You still do all the time. And I've been looking at this channel like this, mainly because we've seen so many reactions along here. We had a little bit of a throw over. Typically, I'd rather see the throw over up here, but regardless, equities are divergent on this 4-hour still. I think that's significant because it's showing that we could, fall a little bit into December. And I do have an interesting stat for you guys on December, and it is December 1st. If you take a look at the first trading day of December performance from 01 to 2022, we're only up 36.4% of the time. Now that is today. And I think that we could see, some of the generals start to roll over. And we've had a monstrous month, right? I mean, the triple Qs, I think they had a 11% month almost. And I saw this stat from Goldman the other day that they put out. Says on a rolling SPX 1 month price return, anytime we have a roughly 10% move, you can see spike here, fall, spike here, fall, spike here, fall. You can see it even in later dates. But typically it's not uncommon to see a 3 to 4% pullback after that rally we just witnessed. So when we're talking about the S&P, turn down some of this RSI.
I guess that would complement kind of what I was just saying. Then.
Exactly. So this is
okay.
This is a longer dated chart. But let's see, we saw a 3 to 4% pullback. Well, that would put us right at this trend line here, pretty much at 4,400. And I think that this is kind of my new bull bear line, so to speak. 4,400 is a massive level. And I'm pretty sure if we took the fib from here up to here, pretty darn close to that 38.2, which is the continuation fib, right? So that's what I'm looking for. And I think that the market is very aggressive on where the Fed may go. I think that they're, just to take a quick look at the Fed Watch tool, we're pricing in a 48% chance of a cut roughly 50% chance of a cut in March. And they're saying there's a 32% chance we're down to 4 to 4.25 by year end. I think that's extremely aggressive. I don't necessarily agree with it, but let's just, for the sake of the argument, let's say that they do cut. Now, trading days from the first Fed rate cut to the market low, on average, after we cut rates, which everyone's so excited about, we typically see the market fall, on average, roughly 20%. You can see that the average is around 200 days, but you can see how far
Nick,
it's stretched out.
Grantham says the markets don't bottom for 6 months after the first rate cut by the Fed.
Yeah, so that would be, around 180.
He's been around. He's even older than me. Hard to believe, but Jeremy Grantham. Yeah.
Yeah, I guess I'm just pointing out that the Fed cut might not be the great all be all to put us at all-time highs again, right?
Well, I mean, thinking about what you just said, and Dale, I agree with you. I mean, what is the current condition of the U.S. economy that would warrant a cut? We'd have to have some really shit data over the next several months. Like, we are losing a couple 100,000 jobs a month for the Fed to even blink.
When bad news is bad news.
Right.
Of bad news is good news.
What about if inflation goes through target the other way?
Like deflation,
you mean?
Not necessarily deflation, but you start getting, everyone's talking about every central bank. Oh, we want to get back to target. What if it goes through target and keeps on going? What if inflation is 0.8% next year?
If our balance sheets are as bloated as they are, and we go into a deflationary kind of spiral, I don't know. That's going to be crazy. So I don't know.
But I also want to show you guys. I was taking a look at December last year, and if you see this spike high here, December 13th, Tuesday, December 13th, that was CPI. So what happened last year in December? We had I think it was a 0.1 print on a 0.5 expectation. Everyone thought, woo, the Fed's going to go easy on us. Inflation's finally slowing. And then we fell 7% and 6%, almost 7%. So, we have CPI coming up this month again. And if December of last year printed a 0.1, if we come in anywhere above 0.1 this upcoming month, that's going to print a higher year over year. Do you think the market's going to be excited about that? And to Ryan's point, could the Fed come out in December? Well, the Fed's right after CPI. Do they come out and just shut this market down a little bit, stuff the net? I think that's doable. And I think that it kind of makes sense to see this type of a pullback. And, seasonality wise in the Russell, in December, you tend to see a sell-off mid-December that starts anywhere between the 4th and the 6th, and it typically lasts about 5 days. So I think, with that CPI coming out, with it such a low reading last December, any print higher, that year over year, I think it makes sense to be a little bit bearish equities in December. That's how I'm feeling. I've been talking about being short all week. I started a short. I'm long dollars off that 618, but it's all small positions right now because this is still bullish. I don't want to get aggressive right now, but I'm just dipping my toe in the water to add to something in December in the event it starts. And I think, with that stat for December 1, we could see it start today. In the Mag 7, I posted this chart to everybody. We saw a breakdown yesterday after consolidating for 2 weeks. This is all the Mag 7s put together into a chart. And we've been just consolidating really tight range, finally broke. I imagine on any pop back, there's going to be sellers. And we've had such a run this year. I think, some of these funds getting out of their positions in December makes sense. I also like Blake's case about people trying, fighting the redemption.
And and people get, the market likes to wrong foot everybody. And I'm thinking the market's going to make a fool out of a lot of fund managers this year. And I believe that. Hey, listen, we got about 2 minutes before the Canadian jobs report. I need to take the screen back over, Nick. But Nick, great data and great actionable items. I love the research that you're doing. And appreciate you coming on and sharing that with everybody here at the ForexAnalytix community. I think it's extremely powerful. I'm pulling up the data flash right now. Ryan, Kman, any thoughts about Canadian data that you had from the Flow show before it comes out?
Yeah, I think it's a very simple question. Well, actually, it's a dual question. One is very simple: is the dollar Canada at 135? That's a pretty important level, I would say.
Yeah, 200-day, Blake. If you pull up the daily.
If that would give way, then we're talking about the big support level from where we started the rally up to 139, around 134, 133.80, if the report would be really good. And on the other side, your purple line there, around 135.70, 80, call it 136 perhaps. That's going to be the top side, where I would suggest that it really has to be very bad for it to break to the top side right now. But if you have a really good report, there's one that is really on my radar, because we are around a pretty decent level, is EURUSD around 147.5. We're trading just below. It's been coming off over the end of the month, but a good Canadian report may be a bit of the final stab in there for another move lower. That is what I'm watching on the Canadian report.
Awesome. I didn't pull it up just because I'm running out of time. I can't flip back and forth so quickly with the EURUSD, but great stuff. Kman and Dale, you're right. 200 DMA. and the 161% extension is just basically at today's low.
It was so weak when the dollar was ripping yesterday, Blake, that that's a tell.
Pretty okay report.
Good data. You know, unemployment rate stays at 5.8%.
Yeah, good full time.
Wages up.
Unemployment rising to 5.3% in line with expectations.
So as long as we are below right now 135.50, you know, staying heavy. You know, there's you know, if we get back above that on strong data, then you don't want to be short. I'm going to say that.
Commodity currencies are my favorite for the next dollar decline.
Yeah, I mean, look, I mean, the Aussie's been basing out pretty nice. You know, Kiwis, you know, doing the deal. We're back above the 200 DMA here. So yeah, I mean, if the dollar is going to weaken, you know, it's probably not a bad place. I mean, you got pretty manageable risk, you know, being short the dollar CAD on any rally at this point. You know, because you get above 140 here, and then you know you're wrong. I mean, that's plain and simple, right? If we do get a continued dollar bounce, which I think we are going to. Now, Dale, do you have a guest today?
Nick was our guest.
Oh, Nick was our guest. Oh, well, I don't know if Nick's still here, if he still wants to join in.
Thank you, Nick. You're now my trading warrior brother. Thank you for your interview today.
Hey,
and
well,
acknowledging you learned a few things from me. Thank you.
Dale, I tell you what, you've been with us since we started the F.A.C.E show. And you know, every day, you know, I think you could probably say this about, you know, yourself. I know I could say this about myself. And I'm sure that anybody that's been in the markets for any length of time can continue to say this. You never know everything in the markets. No. And you always pick up pearls of wisdom along the way. And it's great to find people that, you know, and I leverage my relationship with Dale to learn things every day from him and the rest of our, you know, staff here at ForexAnalytix. And that's, you know, one of the benefits of being in the markets is you never stop learning. As most of you guys know, I traded with a gentleman, his name's Ronnie, and he was in the $1 billion day documentary. I traded for him for you know, 5 years, about 4.5 years. And he's older than Dale, and he's been around the block and, you know, managed money for 50 years. And he will tell you, he'd tell me every day, you know, I learn something new every day, and I'm so happy I do. It keeps me engaged. And so that's what we do around here. And I hope that each and every one of you are picking up little pieces of, you know, information and nuggets and things that are going to help you along your journey in the markets. And that's what ForexAnalytix and our community is all about. So, so Dale, thank you for always teaching us something.
We edify and build up traders every day. That's our mission statement.
There you go. Yeah. So with that being said, let's go around the horn before we cut out for the weekend. Let's start with you, Dale. What are your thoughts going into this week? Where should we be playing defensively into Friday? What are your thoughts here?
Dollar up, everything down. I agree with Nick. I'm even looking for a little deeper retracement, but 4,400 would be okay. Prepping myself to for this dollar rally, another 150 to 200 higher to fade it. And my preferred longs are really the Aussie is my preferred long, and Canada would be another. That'd be a short USD CAD. So
you'd want to short the dollar CAD somewhere up here. Somewhere.
Yeah.
Okay. Very good, Dale. Ryan, what are your thoughts going into Friday, and where should we be positioned?
Well, I'm getting a growing itch to be short dollar yen, to run into a change from the Bank of Japan. We were discussing that in depth on the flow show, so I won't go into it again in detail. Keep your eye. A lot of people forget we actually got some decent data today. We got the PMIs and the ISM later ahead of Powell. So, you know, we know how the market's data dependent. So that's going to be something that's going to swing expectations. But yeah, I think that we're now into the build up for these last central bank meetings of the year, and we got, as Nick said, the CPI from the US just before the FOMC, and that's going to be very important. Very important.
NFP right next week.
And
NFP's next week. Yeah, we'll be covering that live here for sure. So awesome, Brian.
If you've had a good week, don't spoil it on the last day. Friday's pips are beer pips.
Yeah,
that's a great point. Kman, what are you thinking going into Friday this week?
Yeah, as far as the dollar is concerned, two that I really monitor extremely closely right now is the euro dollar and the dollar Swiss. And I still like perhaps a bit of continuation in the Canada, but it may rather come through a cross. And I'm really going to wait for what Powell says to do anything else, really. Whether it be sterling, Aussie, Kiwi, they're correcting, but a lot of it is going on in the crosses. If you look at those euro crosses, are looking relatively weak, and I'm looking for a bit of a continuation trade on those lower CPIs in Euroland. Growth data not that great, so if you want to steer away from dollars ahead of Powell or the numbers, you have a look at those euro crosses. They may be interesting, you know.
One of our ForexAnalytix members, I'll just call him Five Magics. He's been a long time community member with Ryan and Kman even before Forex Flow and ForexAnalytix joined forces. He was out there. He was putting out some research about the Swiss. This may have been it, like as far as strength goes. And I was looking at the Euro Swiss, thinking, what a great inverted head and shoulder pattern if this thing can reverse higher from here. And I was just kind of thinking that as far as the Euro cross goes.
But then you have to be a believer in the euro.
Yeah, that's tough, right? And I'm gonna say
the thing is, I think those who put out that piece is the same bank that uses the flow show as their weekly wrap, right? I guess they have listened to the flow show on Swiss franc as well, because I was saying for the past few days, I think Swiss should do well into the end of month, and then we take the other side, you know.
Yeah, and I got long. I added to my long dollar Swiss exposure. I'm actually flat right now on my much bigger position. And I'm long. I'm looking for recovery here. I think that was a nice washout yesterday post IOM. So that was a great call, Kman. Hey, I'm gonna say this as far as I'm concerned. I think the euro continues lower. As I wrote here yesterday, I think the 108.17 is possible. We could even go below that. I'm looking for us to start creating lower lows. So with a false breakout, lower lows created, then you start selling rallies. So, we trade back down towards the 200 DMA, just above 108, 108 and a quarter, 108.10. We start creating lower lows, then you sell any rally back to 109, and that's going to be your path forward going into next week into the jobs report. So focus on dollar longs and counter trend tactical longs, like I said on the trade-off show when I did it with Chris Weston on Pepperstone on his show earlier this week. That's the play of the day, and it's going to continue to be the play of the week for me, is playing US dollar tactically on the long side here, so especially against the euro. All right, well, Dale, Ryan, Kman, and I don't know if Nick is still here. Nick, if you're still here and you want to chime in real quick, what you have any last minute thoughts going into the week?
I am still here. I hate to bring up a whole other discussion, but Kman's really, really knowledgeable on this. And what I've just been thinking about with these yields is if 2024 could be the year that we see equities and yields rise and fall together. Because I think if we see that pop, if we see another pop higher in yields going into 2024, do bonds look extremely attractive? They kind of do. And I'm just wanting to mention to people, don't be surprised if they start rising and falling together. And if you're someone who trades that inverse correlation, equities down, yields up. Don't be surprised if, because historically they do rise and fall together, and that makes sense. So don't be surprised if we get back up to 4.6% or so, and the equities start to roll over and yields roll over too. Just know why. It's because bonds are actually a true safety haven at that point.
Well, there's bonds are an alternative for people, and they haven't been for how many years? Dale, when's the last time you bought a certificate of deposit? Last time I did was maybe
never.
What?
I
did. You never park money in the CD? Gosh, I parked money in a 5% CD. But I want to say 2005.
I have to be liquid at all times so I could average out.
Dale's a big spender. He never had to buy CDs. You spend
That's right. That's right.
Hey, big spender.
Exactly.
It's all in a briefcase in the bunker.
All right, guys. Well, hey, I want to say thank you all for being part of the Forex Analytics community. Dale, I'm going to pass it off to you, and thank you, the team, for being here and wrapping us up for the week.
All right, Blake. A dream team, great week. Caught the dollar. Mission accomplished. All right, if Paul could say it, we can say it. Mission accomplished. And what we say is actually actionable. So instead of saying my tagline, I'm going to sing us out of here.
Woohoo!
If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings, and reduce your leverage, and you'll sleep better. So have a great weekend, everyone.
Cheers,
all right.
Thanks,
So
everyone.
count cheap. Just count them. Don't do anything else with them. And have a great weekend, everybody.
You do the same.
Right. See you,
Thanks, team.
All right. Miriam got it.